What's up, guys? Back with a quick video. Let's talk about saving versus paying off those student loans. So, for this video, we're talking about would you save for a down payment or would you pay off student loans? So, number one, if you are looking to buy a home and let's say you're fresh out of college, maybe you're a year or two out and you've already working for a great job, a great career that's starting out, but you're asking yourself, can I weigh myself with a student loan payment and a mortgage payment? That is a great question. So, number one, people would tend to say, let's work on the student loans. Why? Because those things are going to be right on your back a year after you graduate or however long the term is before you have to pay. And if the sooner you pay them off, the less debt you'll have to pay. And the sooner you pay it off, obviously less interest you'll pay overall. However, student loans have low interest rates and home prices can rise every year. So, one basket, you have student loans where you're saying, okay, that's what I need to pay up front. But if I pay them off quickly, I don't have to worry about the high interest. But if you're on a house, you're saying, well, houses can appreciate in value most of the time. So why don't I just go ahead and try to lock it in right now? So you have to ask yourself that question. Are you able to pay off those student loans quickly? Or can you balance the payments but also pay off a mortgage? And it's very possible to do both things, but you have to follow some tips. So we're gonna get up for the saving for a down payment first tips. Now it depends on where you live, depends on the cost of living over there, it depends on your income, it depends on if you have a partner or not, it depends on the rates, it depends on the mortgage industry, it depends on many things. Are you buying, are you renting, etc. So having student loan debt, everybody thinks is the end of the world. People say, oh my goodness, student loan debt, I have a whole bunch I have to pay off for this school. It's going to be taxing me. That's my first big payment. Then, people don't think about it. They think, oh, well, car loans, fine. Insurance, fine. Mortgage, fine. But when they see student loans, their eyes just, they get big and it thinks, wow, those things are very hectic to pay off because you're scrambling around every month trying to give back to the school that you went to. So let's think about it in this way. Student loans have longer repayment terms on usual because they typically feature lower interest rates. And obviously, you know, the student loan lenders, they look at you and they know that you're not going to be able to pay that off in about 3 years unless you have a lot of money saved up because they know school, higher education, it takes a lot to pay it off because let's just face it, higher education costs a lot of money unless you go to a very, small community college, etc. But besides the point, in general, they know that students are banking up a lot of debt and they just want to have a higher education. So that's why longer repayment terms and you would have a lower payment price, lower monthly payments. Say you have to pay 400, 500, depending on that. And yes, that is a lot in the grand scheme of things to some people, but you have to know that there are advantages out there to take yourself into so that way you won't have to worry about those student loan payments overshadowing your bigger picture for your life. Now, your down payment will lower the overall cost of your mortgage, yes. So you may be thinking, why don't I just save up money and pay off the student loan at another time? However, there are student loan forgiveness programs or income-based repayment plans that can lower your student loan payments as well, while you're being able to save up for that down payment for a house. So, number one, the first path would be pay off your student loans first. Why? Because the longer you wait to pay off that student debt, the more interest you're going to have to pay. The higher that interest rate, the more you will save by paying the debt off as soon as possible. Why wait for that interest to accumulate and for you to incur a larger payment than for you just to say, let me focus on one thing and let me save up for another on the side? Yes, you might have to allocate when you look at your net income, allocate more money towards student loan payments, but in the long run, we have to think about it. Think about the stock market being a long run game. It's not a short term game, excuse me. You have to look at what's happening now, but you also have to plan for the future because you know that you can always save up and buy it later. You never know if mortgage rates are going to go down because right now we're at a top point where mortgage rates are so high and the median income to buy a house has went up to in the hundreds of thousands of dollars. People cannot afford to live by themselves. So whenever we see so much student debt, we have to understand, number one, take care of that first. Because if you pay off your student loans, it means it's entirely erased from your credit report. While it's not a huge, substantial factor in credit rating, it's still a factor. And if a student loan interest rate is variable, it's gonna more than likely go up over time, costing you even more money. And then interest paid on student loans is tax deductible, and any type of debt can have the psychological effect. And like people like me, I think, well, you got this student loan debt to pay off. You can go into the home buying process debt free once you pay off those student loans that you owe. Now you have to make a list of your debts, and you have to understand, what do I have to allocate money to first? What do I need to take care of first? Is it a car payment? Do I have to pay the interest off? Do I want to pay the back principal and interest off? It depends how much money you have, obviously, but make a list of all your debts. Pay off the high interest debt first, and then go ahead and worry about saving for your home payment, your home down payment. Now, I know I'm not talking about the home down payment. I'm talking more about student loans, but this is also just a general session to talk about debt and how you need to manage it, because people getting out of college, I see them, they're saying, I want to buy a house, I want to get my own place, but at the same time, you have to understand how you're going to do that. You can't just jump into a credit agreement and say, well, I'm going to pay this off, and then you have to have a house foreclosed on, or you're going to get evicted from renting, etc. You have to know where your money is, how it's working, and what you're going to be working with. So obviously we can put our money in investments, but remember, you have to have those things locked in for a period of time. So maybe you want to put it in a high yield savings account, maybe you want to put it in a regular savings account. Also understand refinancing on your items. Like my last video talked about, refinancing can help you. So if you have something right now, you want to put down payment on the house, but you have an auto loan that's outstanding, you can refinance that to help yourself out. Just have to go through another credit application. So we've talked about items. I talked about items in my previous videos about mortgages and home buying, etc. So I'm not going to get into that, but what I can say is that basically when you're worrying about your student loan payments, understand you have a period that you don't have to pay right after you get out of college, but you need to use that period to save up as much as possible so you can basically almost put like a down payment on that student loan and say, okay, let's go ahead and get this started off in the right way. Because if you wait and you just keep paying little by little, month by month, that's going to be there forever like a mortgage, and then you won't be able to have access to having a mortgage because you have two mortgages outstanding, but where you can't get the second one, aka the house loan, if you don't be able to pay off the student loan. So I'm making the student loan equivalent to a mortgage because it have a long payoff time, maybe not 30 years, but some people pay it off maybe like 10 years, 15 years, because student loans are substantial to us. It may not be substantial in credit factors, but it's substantial to our pockets. So whenever you need to think about having a mortgage payment over a student loan payment as a priority, take the student loan first so that way you can get rid of that because it's still a factor in credit history. And then once lenders see, oh, you paid off student loans or you're paying them very greatly, they'll go ahead and approve you for a mortgage application and say you'll be able to apparently get your house that you want, and then you also have a good down payment on you. You have FHA loans, 3.5%, but have higher interest rates and also require PMI. But you can take advantage of that. There's always options out there for you to be able to balance it. It's truly possible to balance. My opinion, this is not financial advice, but I'm saying in my opinion, I would go knock out student loans first and then worry about the house later. So don't try to jump ahead of your debt curve and say, oh, I can do it, because sometimes you cannot. But guys, thanks for watching. Tune in for the next video.